Gold prices ended the day higher, about $10 north of 1850, despite driving prices all the way down to 1830 following the CPI number this morning, but then quickly rallied higher as Fed speakers suggested that a 75 basis point rate hike was not likely in the coming months. They will maintain their 50 basis point expectations, which is already priced into the market. Now, gold has seen a bit of a decline since the mid-April highs of just shy of 2,000, down about 7%, but nowhere near where we're seeing the equity and other risk markets declining, which are all well over double digits. So at this point, gold prices not seeing quite the losses that we're seeing in other asset classes. And again, rallying today about $10, despite the fact that the dollar was higher, treasury yields were lower, and Bitcoin was lower as well. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility was slightly lower today as we rallied prices. Early on in the session, we did see volatility nudge higher, but as prices recovered and got back above 1850, we saw volatility coming off, so nudging lower as during the session as prices rose. Lastly, what do we have the rest of the week? Well, we've got the claims number coming out tomorrow. In the moment, look at the jobs report. Last week came in a little high. This week they're expecting it a little bit lower, but still on the elevated side, about 190,000 new filings. Likewise, we get the PPI number, so part 2 of our inflation data. Today we got CPI, which came in slightly lower, but obviously still very high. Same as expected for PPI as well. And lastly, we will continue to kind of try and interpret what the Fed speakers are saying. There are no scheduled Fed speakers on Thursday, but that doesn't mean we won't hear from one of them. At this point, Fed speakers are trying to kind of nudge policy along, keeping the market calm and looking over at the equity markets. It hasn't really worked, but at this point, keeping the market steady, expecting 50 basis points at both June and July seems to be what they're trying to convey. So gold prices, after selling off all the way down to 1830 today, rally up north of 1850 to close the session with claims tomorrow and PPI.